Hi, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vase. Good to get back to a normal workstation with multiple monitors and convenience. I'll try to keep an eye on your live chat this time, even though it's always hard to do videos and chat. Good to have good internet again. No more Mexico. However, the thumbnail is still from Mexico. I just have like good thumbnails. World of Rusty, great job. World of Rusty on Twitter is my man for thumbnails. And I wanted to stream from the cave, but that clearly was not going to happen. So that's my last Mexican thumbnail that I wanted to use. So we're doing it today. Okay, guys, a lot to cover. And as you know, my podcasts get kind of long. Let's get through the announcements real quick. The workshop tomorrow, the webinar, tomorrow's webinar, I'm going to go straight to screen share. There's going to be some interesting stuff on this podcast. But I want to make it clear that the webinar, let me get this out of the way. I haven't streamed on this workstation in a while. If you go to workshops, the webinar is right here. If you just put your cursor over it, you get a lot of information, okay? This is an introduction to trading webinar and does not include access to the TD indicator. Well, TI indicator, actually. The webinar agenda will be 3 hours long. It'll all be online. It'll be done over Zoom. And you can type in your questions, and I'm going to have someone, go through those questions, maybe ask follow-ups, and then we will go through the questions, okay? I'll try to do questions in between them and stuff. So a couple of things. I'm going to tweet this out with details. If you've attended my workshop in the past, if you've purchased the indicator in the past, there are discounts for this, right? There's going to be discounts. This is going to start being the prerequisite for attending the in-person workshops. We're going to try to figure out a way to do this. Ideally, I want you to attend one of the webinars, or we may have to start, charging you for the video, but it will be a prerequisite because I do my best right now in the in-person workshops to accommodate someone that has never made a trade in their life and someone that has traded for 10 years. And I need both of those people to walk away from a 7-hour workshop happy. Now, I don't know anyone else that has been able to pull this off, but so far I have. I've had people come to my workshops that have 10 years of trading experience. I have people come to my workshop that don't know what a candlestick is, and both of them walk away happy. No, Tyler, unfortunately, will not be able to join today. Neither is Leah. But I will try to get him on again soon. Okay, so that's it. If you just want to purchase the indicator, click on indicator. And please read the description. If you want to know where I'm traveling to next, I am in town. I am in New York for Consensus. And after that, I am leaving. I am just here for Consensus. I am speaking at the Blockchain Economic Forum. Then I'm not sure what's going on Friday. Workshop is Saturday. Consensus. I'm not speaking at Consensus. I'm just attending. And then I will be in Malta. There's going to be some. Oh, by the way, mark the 20th on your calendar. I'm not telling you what's going to happen that day, but it's going to be probably my new, it'll probably be the biggest viewed stream I've ever done. So you don't want to miss this. You don't want to miss the stream on the 20th. It's all set. We're going to announce it soon. Really, really, really good. Really good. I can't believe. Shout out to the Tone Vase team for getting this done. It's going to be awesome. If you want to help and support, please check out the affiliate page. If you want to learn trading, please check out Learn Trading. And if you want to buy a t-shirt, and there's going to be a lot of other cool stuff here, please check out the store. Okay, speaking of the highest viewed Tone Vase videos, I decided to go and take a look at the history of my views. And I think what I'm going to do next week is going to trump them all. So the highest viewed video to date is my interview with Cliff High. That took place in March of 2018. The debate that has the bottom is the bottom in debate. That has just got into second place yesterday with 55,000 views. And that is the big debate has Bitcoin bottomed. The prior second place was my debate with Roger Ver from February of 2017. This debate is now over 2 years old. Please go back and watch it. You can see the name. You can just Google for it. Roger Ver versus Tone Vays about SegWit. Everything I said then, other than a few technical, errors on my part, but everything conceptually that I like, if I was to do that debate all over again, I don't think I would say anything different other than be a little more accurate on the technical side. For more accuracy on the technical side, the following day, you can see the little image in the same room. Johnny Dilly of Blockstream at the time debated Roger in the same room the day after. You can check out that debate. Also, crypto scam number 6 about Ripple, also from February 2017. Wow, I did a lot that month. With Peter Todd is ranking really well. And the big 8-hour, 7 hours, 50 minutes, the Bitcoin hash war was great. Then the Unconfiscatable conference, the one-day conference. And then this is weird. So the very last Tones market analysis, number 99.999, because I wanted to save episode 100 for something epic, and then I changed the name to Trading Bitcoin instead. So I kind of scammed everyone. But and it's titled "How Low Can Bitcoin Go?" And that was done in November of 2017. So November 2017 was 1 month before the all-time high. The all-time high came in the middle of December. In November 12, 2017, I did a video, "How Low Can Bitcoin Go?" And I'm actually curious. I'm going to go back and watch it and see why the hell does it have so many more views than any other TA show that I've done. Then we have the Craig Wright interview, then Murad interview, and then Richard Hart interview. So those are like my top 10 or whatever. So check those out. Really, really curious. I looked at the stats the other day. Really awesome. Oh, number 1 is just a trailer. It's the trailer for Magic Money, the documentary I was in. Okay. I hope I'm not boring you guys, but before we get to the price of Bitcoin, let's talk about probabilities that the bottom is in. I want to do this first before we go to the price of Bitcoin, okay? So I actually have to switch screen share. I wonder if I can just switch it. Yeah, I can. Okay. So let's switch it to this. Okay. So I actually did this on my flight over from Mexico. I didn't have, hope you guys can see that. I didn't have, actually, I'm gonna double check the prices for the S&P, the prices for the S&P 500, just because I was thinking down in my head. We'll double check on that. Okay, we might change that. So here's the price. Here's my probability chart. Right now, I want to explain it real quick. All right. So price and time are both important. Okay. Price, and this is why I'm 40%. Price and time are both important. Now, I said this when a bear market started. So back in early, kind of early, so someone said, "Oh, don't say I kind of scammed everyone because there'll be a meme." Yeah, probably, but it'll be out of context, right? So that's how you know people are scammy. So back in when a bear market started in the early days, like it'll be impossible for you to find that video, right? But I've always been like I was a student of Martin Armstrong for a while, and that's where I learned how valuable price and time cycles are. Okay, by being a big fan of Martin Armstrong, reading all of his work for years, attending several of his workshops and conferences. And that's where I learned the importance of time. And when the bear market started, I anticipated that this bear market would last at least as long as the last bear market, probably longer, okay? So the earliest I expected the current bear market to end, according to time, is the fourth quarter of last year through the first quarter of this year, okay? And we're just out of the first quarter now, right? So the first quarter is the first 3 months, January, February, March. We're already in May, okay? Those are my time targets. The earliest I expected the bear market to end was going to be at the end of 2018, early 2019. Then the middle of 2019, and then finally at the end of 2019, going into the 2020 halving. That was going to be my, latest time for the bottom in the price of Bitcoin. Okay. Now on the price side, I had 3 downside targets: 5,000, 3,000, and under 2,000. And I could put 1,300 there, but that's just, too specific. Like I don't know what the price is going to be. But if we go under 2,000, that would be close enough to 1,300, right? So if it's not, if it's not exactly 5,000, it's closest to, right? Like I can even put a greater than sign here. Okay, like just so it matches. Oops, sorry, that's less than, greater than 5,000, right? Like greater than 5,000 or 5,000, right? So, so for me, the chances that Bitcoin was going to bottom in this bear market above 5,000, in this time period was only going to be 20%. And the more, because you can have a correction through price and you can have a correction through time, okay? Both of them are valid, but the Bitcoin can only go so low. Like I don't expect Bitcoin to go to 0. I'm a huge fan of Bitcoin. So anywhere below 2,000 is close enough to my 1,300. Now the perfect buying opportunity for me would be at 1,300. But if we get to like 1,500, I'll consider that, a perfect call of 1,300. It's close enough. It's not that different. And if we would have gotten to under 2,000 in Q4, I would have given it an 80% chance that the bottom is in. I think that was Tour de Meester's number, that 80% chance the bottom is in at 3,000. That was going to be my under $2,000 number. And by the way, if we're somewhere in between these two, then the percentage is somewhere in between these two. Or you can say, hey, which number did the price get closer to? Did it get closer to 2 or did it get closer to 3? And then you can go with this number. Okay. Now, the reason why these things are in red is because they can no longer happen, right? Because we've already gone lower than 5,000, so nothing in the top line can occur. And we've already passed this time period, so nothing in this column can occur. Now, these things can still occur. Now, my middle ground is 50%. If we would have hit 3,000 for the first time, or close to 3,000 for the first time in this time period, then I'm 50-50 is the bottom in or not. And like, I know it sucks to be 50-50, but that's what it is, right? It's the middle price target and it's the middle time target. Now, this is why I'm still at 40%, because the correction through time occurred in only the first part of that correction. And the price was 3,000, the middle target. Now, if we pull back down to 3,000 in the current time period of the current 6 months. See, now it puts you at the 3,000 consolidation period for a 9-month stretch, okay? For a 9-month stretch, and that's enough to bottom the price. Now, if it stays at 3,000 all the way into Q4, I would raise the probability that 3,000 is a bottom to 80%, okay? Now, if we fall under 2,000, that's pretty much the bottom. Now, things can always get worse. We can get stuck below 2,000 for a long amount of time. Mining could be in jeopardy, you know, all this other stuff, right? Now, if we flash crash down to 2,000 in the current quarter, I would give it an 85% chance that the bottom is in, okay? Like over here, I mean, I can even go higher. I can even go 95, but a 90% probability is good enough. There's really no reason to ever say anything's 100%, in my opinion, right? I mean, look, Tyler has his own views on percentages. These are mine. Now, the percentage chart doesn't change. Now, notice how these are this side here, right, is scaling differently than this side here. It's not symmetric. It's not symmetric because price has a lower bound. Time does not. Time doesn't have a further bound. Time goes forever, right? Time only goes forward and it goes forever. Price eventually bounces, right? Well, unless you're, unless you're a foreign currency. And then it kind of goes in one direction, right? The dollar is different. Well, we can talk about the dollar. The dollar is a special case. Now, the same exact probability applies to gold. Exactly the same. Only time is different because gold takes a lot longer to bottom out. Bitcoin is faster. So again, being a big fan of Martin Armstrong and his pi time cycles, the pi single time cycle is 8.6 years, okay? It's very, very critical for Bitcoin as well, okay? My 8.6 year life cycle of Bitcoin was going to be my most important date in the life of Bitcoin. Its first 8.1 year full circle history. You know what happened on that week? SegWit got in, okay? And that was huge. So I'm a believer in the pi cycle. So gold tops in 2011, okay? Now, approximately 8.6 years from that is right around 2020. So that's one full pi cycle from the top of the price of gold. Now, I also had my price targets of gold, right? Now, I haven't talked about them much, but as you guys always hear me say, I still think gold can easily go down to $800. So the chart is the same, okay? And gold happens to also be over here in this area, right? Because we're still pre-2020, and gold only made it to 1,000. It made it to $1,040, about that area, okay? Now, we still have time before 2020, so it's possible that gold can go under 1,000 and get close to 850, in which case, I will say with 80% certainty that the bottom in gold is in if we fall down to 850, okay? Now, if we fall down to 850 after 2020, between 2020 and 2025, so next year, if we go down to 850 next year, I will give it a higher probability that the low is in, okay? Even though things can always go lower and they can stay there longer. If gold stays under 1,000 into 2025 and beyond, now that's the second pi cycle, right? So this is the first 8.6 years. If you add 8.6 years to that, that puts you above 2025, okay? Again, I just did this on the plane. I may adjust these time periods. I'm very familiar with Bitcoin's life cycle. I'm less familiar with gold's life cycle, right? So I have plenty of time to adjust these, right? Like this date is pretty set. This 2025, maybe I'll up it to 2028 over here, and then beyond 2028, right? I have to think about it a little more, okay? Silver is following gold in exactly the same way, only silver had a lot further to go, right? Now, I also didn't even think silver was going to fall that much, and I haven't really done these percentages. Like this could have been, 20, and this doesn't really matter, right? This could have been 20, and this could have been 20, right? That's not the important part, like 10 to 20 bucks, right? Somewhere in the middle. The thing is, we're already below this number, right? We're already in the middle zone. Silver came to like $13, but I still think silver has a high probability of going below 10, just like I think gold has a high probability of going below 1,000, okay? Down to 800. So silver is in the same boat. Silver has a similar life cycle, though I think Armstrong has them slightly different life cycles. I want to simplify things. So I may have to think about it some more about the time. The 2020 is not going to change. I think the probability that Bitcoin has bottomed is 40%, and it's the same as gold, and it's the same as silver, okay? Now, if we can make it into 2020 with this number above $10, that means we don't crash today, we don't crash this year in silver or gold, I will up it to 50% chance that the bottoms are in, just 50, okay, 50-50. And after that, as time goes on, I have more confidence that the bottom is in. If price drops, I have more confidence that the bottom is in. Now, S&P and the dollar are a little bit special. Now, I should probably change this to Dow, or I'll convert it to Dow. Let me, I know I'm spending a lot of time on this, and you guys might want to see the Bitcoin charts, but I need you to understand why I'm at 40% and what needs to happen for me to change my mind, right? Now, this is as far as, now I can change my mind without this, right? Now there's a 40% chance that the bottom is in. Now for me to say, hey, I think we're in that 40% zone, I am now convinced that the bottom is in, I need to see a bull trend. I have not yet seen a bull trend. All I saw so far is a bounce in the price. A bounce in the price. A bounce in the price is not a bull trend. It's just a bounce in the price, okay? It could be the start of a bull trend. And when I see a bull trend, then I will say, hey, I think the bottom is in, and it was, the 40% scenario, a little unlikely, but hey, it happens, right? To me. Also, because of Bitcoin's halvings, which gold doesn't have and silver doesn't have, maybe this wasn't the right way for me to think about it. Maybe I should have taken the halvings into account, okay? So maybe this should be raised a little bit, right, because of the halvings. But I think that the halvings is the reason why I have such a short time scale versus gold or silver. Now, let's talk about the S&P real quick. I am bullish the S&P. I have been bullish the S&P. Now, keep in mind, the S&P was bottomed in 2009, and it has gone through its 8.5-year life cycle since the bottom, 8.6-year life cycle. But for rounding purposes, I left the time. I put the time zone, the time slots the same. Like I could have put this shorter, right? Like we could have already passed this time. So what are the chances that the S&P has topped? I think there is only a 20% chance that the S&P is going to top below $3,000 and this decade, okay? After that, the percentage goes up. If we were, because eventually you have recessions, right? Like nothing goes up forever. The stock market does not go up forever. It also goes down. Now let me flip screen share again before I go on with the numbers. Maybe I should have done, hold on a second. That's silver, that's S&P. You know what? Let me take this. I'm going to put that here. I'm going to take the dollar. I'm going to put that there. And I want to take this. and I want to put it here, and I want to make this Dow because I have better numbers for the Dow, and I'll show you why. Dow. Tones Dow top chances, right? So that's obviously not going to be 3,000. So let me change screen share real quick back to, hey guys, earlier I was showing you my most viewed videos. I have like 1,200 people on now. That's just a trailer. So to a documentary I was in, Magic Money. But after that, it's On the Record with Cliff High from 2018. The video from a few weeks ago, Has Bitcoin Bottom, has just surpassed my February 2017 debate with Roger, then my Ripple crypto scam, then the Bcash fork, then Johnny Dilly's debate with Roger, which was, he's way more technical than me, Unconfiscatable conference, one of my market analysis shows, which is weird that it ranks this high. I need to go back and take a look what that was all about, but it's called How Low Can Bitcoin Go? 1 month before the top, where I was calling for the same numbers, 3,000, 5,000, 3,000, 1,300, same numbers. I did it back then too. And then Craig Wright, Murad, and Richard Hart. Okay. So where was I going with this? So let me go to the S&P 500, but I'm not going to look at the S&P 500. I'm going to pull up my historical Dow chart. So INDU historical. Last looked at it in March, and it's a monthly chart. I'll make it full screen for you guys. Hey, thank you to the 1,200 viewers that are watching. Oh my God. Oh, this is really, oh shit. Do you know it took me 3 days to make this chart, and now I can't look at it because it has so much annotation on it. Fuck me. Jesus. What do I do? Hold on. I should have an image of it. Let me find it. Shit. Like I can look at historical Dow, but I have to like redo the I'm not gonna redo all that work because I'm not joking. It took me 3 days. Where is it? Shit. 1 second, guys. Oh, that's not gonna work either. Shit. Dow. Where is my chart? I have to look at really, really small. Here it is. This is the chart. Like I had it in trade. The resolution is gonna be terrible. I don't know what to tell you guys. But I mean, this was the chart, right? I mean, like this, I'm not joking. This took 3 days. I did this for a presentation. It was a presentation in Acapulco, Mexico, where I talked about, I did a presentation on, you can watch it. You can watch the presentation actually. If you go to, oh yeah, you can't see this chart. Yeah. If you want to see that presentation on the history of the Dow, so it's on YouTube. It was at an Acapulco, Tone, Vase, and Acapulco, but I think it was 2017 one. No, not that. Is this it? Yeah, that's it. That's the one. Here it is, right? So that's the chart. That's my presentation. And it was about the history of the Dow and where the price of the Dow was going. Had hair back then. I don't have any now. And so that was about 2 years ago now, over 2 years ago now, okay? And I talked about how the Dow is gonna go to all-time highs, is gonna go to like 100,000 or at least 75,000, okay? There's a whole presentation on that. Unfortunately, I can't pull this chart up for you. I can make this full screen maybe, so you can see it. And this is now 2 years old, and Dow is a hell of a lot higher now. Okay, so this was from the presentation 2 years ago. Dow was way higher now. Dow has gone up a lot in 2 years. So my ultimate high was going to be above $75,000 for the Dow. We're close to 100,000, right? And what's the current price of the Dow? I don't even know. Tell us the current price of the Dow. Because I always look at the S&P. I don't normally look at the Dow. Current price of the Dow is 26,000. Okay, so we're a third of the way there. You know, I just needed above 75K, and right now we're at 26. Okay, so let me go back to my probabilities. So I'm gonna switch screen share again. Back to probabilities. So right here, Dow tops, the ultimate high is going to be greater than 75,000 for the Dow. I'm not sure what the equivalent for the S&P is. We'll have to do the math, right? So right now, I'm going to say, we can say 30,000. Actually, no, 25,000 because we recently broke it. I can even stick with 25,000, right? And that makes it red. And right here, we're in between the two somewhere. So we'll say, let's just put 50, the middle. Let's just put 50,000 here. They're pretty much even. They're pretty much the same, right? So 50,000 greater than 75, and that's just somewhere in the middle, right? And the years are the same. So this already can't happen, right? Because the Dow is above 25,000, S&P is going to be above 3,000 like imminently, right? Like it's going to break it. So it just hasn't broken it yet. And the Dow does move a little. The Dow does have historically better returns than the S&P. It's just that the Dow is S&P is just more of an average and generally a little less volatile. 500 companies versus 30, right? So the Dow is already here as well, 40%. 40% chance that the Dow will top, but like there's no way, right? I mean, we're about to go into this area, and this is a wide zone. So I don't think the Dow will top this year either, but eventually there will be a top, right? Like there's going to be a pullback. We've been going up for 10 years, and eventually there's going to be a pullback. So the Dow at the moment is here. But the S&P is here, okay? Now, they will be the same, give it another year, and they're going to even out because the S&P will break 3K. That would invalidate the top line. And the year 2020 is coming in about 6 months, right? And that would invalidate the left column. And now we're in this zone. Okay, now the S&P can now they have to seriously go up. Okay, so if 3,000 is equivalent to 25,000, we pretty much have to double it and then go above that. So I'm okay with these statistics. So there you go. So these are my probabilities that the S&P top is in. Now the dollar is another bit of a special case. Now let me real quick, I just want to make sure that I'm showing you the right dollar DXY numbers, right? So let's switch over to, let's switch screen share again. Over to, yeah, I wish I could show you that historical chart of the Dow, but that's the best I got. Let's switch over screen share again over to, where was I? No, that's Paint. Here we go. Right, that's that video, right? Just check it out. I'm not Liberty Life Trail anymore, rebranded, but should probably download this video before Acapulco takes it, the YouTube channel takes it down. If anybody wants to download this video, please do. And then if they ever go down, you know, you can hook me up or put it up there, you know, repost it. I don't care. So the dollar, do I have the dollar chart up? So I gotta close this. Like I can't pull up my historical Dow chart. So much effort drawing it and like gone. That's the euro versus the dollar. See, foreign currencies versus the dollar don't work this way, okay? Because countries can print and it's hard. Now DXY is a special case, but I should have a chart of DXY. Do I have it here? There it is, DXY. Okay. Now look, the all-time high of the dollar was 121. Oh no, it was higher than that. My bad. The all-time high of the dollar, I have it here in 1986 at 130. Okay. I don't know if there were statistics before 1986, but obviously after the euro, the DXY has a different formula. I think the dollar is going to go up and way up. I think that, and I agree with Mark Armstrong, or Mark Armstrong has convinced me that the fall of the U.S. That the fall of the United States market, the fall of the U.S. superpower is going to be its strong dollar, not hyperinflation. It's going to be the strong dollar. It's going to be the fact that the U.S. dollar gets so strong, and the current sitting president at the time, hopefully not Trump, hopefully some socialist, will be responsible for the collapse of the U.S. dollar, of the U.S. economy, because they're gonna try to do everything in their power to destabilize the strong dollar, and they're gonna destroy the economy, right? And then everything's gonna implode. But I don't think that's coming anytime soon. I still think we have a good, 10, 20 years. I mean, I'm sure I'll see it in my lifetime, but it's not going to be yesterday like every gloom and doomer tells you. I think the US dollar is going to get very strong and it's going to break 120, okay? So the US dollar has been rising since 2008, since the bottom of the US financial crisis. And I think the US dollar is going to continue to rise. So right here, we have, so I should probably say 100, right? Because we've broken 100 here. Okay, that's about 104. I think we're going to go higher. So I am going to adjust my probability. I just need to look at the chart so I get my numbers right? So that's 100. We have 110 and we have 120. I think the US dollar is going to go above 120. Okay, so our number is going to be 100. The middle ground is 110. And the upper bound is above 120. So, and then I'm going to go to price, guys. So you got to bear with me here. So one more change of screen share. Back to probabilities. So this should not be 100, 110. This should be 100. This should be 100 to 120. So we can just pick the middle. We can say, 110, about 110. Or close to 110. And then we can say, you know what, I'll just leave it this way. 100 to 120. The top is going to be somewhere in here. And then above 120, right? That's the value of the dollar versus other currencies. Now, we've already gone above 100, right? So we're not going to top over there. So this I can actually invalidate. Not going to happen, okay? These probabilities, not in the cards. We've already gone past that, okay? Now, 100 to 120. So right now, we're back in this zone, right? So we're still under 120. So actually, I think both of these are in yellow. Well, actually, no, I'm sorry. This one is in yellow because we did break, my bad. We have broken 100 last year or 2 years ago, right? So now we're here. That the US dollar might have topped, but that's 40% again, right? It's the same zone, 40% chance that it's going to top. But because of the way it's acting, let's just say these are the probabilities. But I mean, these things take, in the case of Bitcoin, this takes months. In the case of the dollar, this takes years. Same thing in the case of the S&P and the market. Let's just say that right here for the Dow Jones, I am a lot like this is like an average between the Dow and the S&P, I'm just rounding numbers here. I think the chances that the Dow has topped is actually less than 40, but my chart just takes the average. Now, the probability that the dollar has topped is also less than 40 in my opinion, but it's in the vicinity of 40. The probability that Bitcoin has bottomed is actually greater than 40, but the most reasonable round number is 40. So I'm going to stick with 40, okay? But in reality, this right here is there's a chance that Bitcoin has bottomed, and it could be slightly higher than 40 because of the halvings, because other assets don't have halvings, right? But we'll see. I'm going to stick to 40 until I see something that changes my mind. So that's pretty much my probabilities of the main assets. We can add oil here and some of the others, but oil is way more like cyclical. Oil is going to be hard for me to do. So there you go. So I'm going to save this and we'll get back to it one of these days. All right, let's talk about the price of Bitcoin. Finally, right? Still have 1,200 people. Good, you guys stuck around. Here's the monthly chart. So I already anticipated the price of Bitcoin to start going down, and it hasn't. So what are we going to do? Well, we're going to adjust this, right? I still think Bitcoin has a greater than 50% chance of making new lows. However, I will simply raise this a little bit to maybe there. Okay, there you go. You're watching me adjust it. I still think that this month we're somewhat likely to top and then go down. And, you know, at least try to test this line here. Now, if we fall down to that $3,000, $3,500 vicinity, and we bounce from a higher level on a monthly scale, let's say that blue moving average, that would strengthen the case that Bitcoin has bottomed, because now we would have spent, you know, 6 months in that $3,000 to $5,000 area. And that helps you correct through time instead of through price. Okay, so I didn't change this by much, but I'm still leaning bearish on the bigger trend. Here is the weekly chart. I'm also using the index, and it shows you some more time cycles. I believe that the next quarter pi cycle, October 5th, 2019, is going to be critical. What is that date going to be, a low? Or is it possible that that date is going to be a high? I don't know. Like, I didn't know that the full pi cycle date of 8.6 years after the birth of Bitcoin, it would have its potentially most critical event of its history being SegWit. Like, I don't know if this date is going to be a news event. Is it going to be a price event? Or is it going to be a no event? I will put a very low probability that this date is going to have a no event. Now, you can always say, hey, Tone, Bitcoin has an event every freaking day. So no matter what random date you select for your pi cycle, it doesn't matter. You will always make up an event that happened that day somewhere in the world that you're going to say is so critical to the future of Bitcoin. Maybe. We'll see, right? I'm going to try to not be hypocritical. But like I said, I should label the prior pi cycle dates, right? Like the prior one, the big one, the yearly, the full circle one, that was SegWit. And the one before that was the Greek banking shutdown, which I also thought was pretty damn critical. Now, this one I have drawn in the middle of nowhere, right? But once we get to October 5th, we'll be able to have a better picture to see what can possibly happen November 29th of 2021, okay? Now, the halving is coming, and right now we're still assuming it's going to be in May, but I got to double check the dates because they're dynamic. Right now, I'm still leaning towards the bull trap, but obviously we've gone above 5.1. Also keep in mind, I was the guy that was buying at 4,000, and everyone was making fun of me for going long Bitcoin at 4,000. Now I've taken profits from that trade, and now I'd rather be in a short trade than a long trade. But all through here, I would rather be in a long trade. And my last 2 out of 3 trades were to the upside. I had 1 trade to the downside. Obviously, that did not work out, but that trade was still profitable to me. If you're curious, when I shorted Bitcoin, I think around here, like April 8th or something. I shorted Bitcoin the week of April 8th. I can probably find you the day. I shorted here somewhere, and might have been April 3rd. It was either on this spike or on this spike. I don't remember which one. You go back through my videos. I don't know. Maybe if I look at lower time frames, I'll see it marked. I shorted Bitcoin either at the top of this spike or at the top of this spike, and I expected it to go all the way to 4. When I recognized that it would not go all the way to 4, I took profits from the short trade, and then I went long over here around April 20th, and I got out of that trade on the back end of this 9 candle right there, okay? So I went long here looking for 6K, and I didn't make it, so I had to take my profit early on a stop loss. And over here, again, I was looking for 4K, didn't go there, so I took my profit, and these were like 10x. These were not like, these were highly leveraged. So there you go. And also my big trade long was at 4.2 thousand here, but it was not leveraged. It was an unleveraged trade, and that's why I was able to hold through the fall to 3,000 and still make money. And I got out of that trade. Well, I got out partially of that trade over here because it made me money, or might have been here, I don't remember. And then I got out on the rest of that trade on this big spike up. Okay, so I took profit from that trade around 5K. I think I got to double check, but these were very good trades. They were very profitable trades. And I'm not going to show you my trades because I had a big trouble with that in the past. So I don't know. But go through my videos. You hear me talk about it. So anyway, so right now, what's happening? Here's the weekly chart. The weekly chart remains bullish. You're on a green 4 above a green 3. I am a trader of the sequential. Green 4 above a green 3. So I'm looking for it to go up. And yeah, so I am looking for 5 more weeks of upside according to sequential, but the daily chart is giving you a very nasty doji right now. This is a long-legged doji, and while I hate trading the long-legged doji, I like trading the shooting star or the compact doji at the high. This is a long-legged doji, something to pay attention to. But potentially you have a few more days of upside. Now, yesterday's video, I said that the 12-hour chart is useful. And I found the 12-hour chart to be even more useful than the daily chart. And you can see right here how the 12-hour chart topped on the 9 setup and was trading under the shooting star candle, which would be enough for me to enter the short trade. But if only it was in line with the daily and the weekly, I would be all over the short trade. But I'm going to be cautious, and I'm going to hold off on the short trade because I think it's possible for us to go a little bit higher over the next few days and then top. So maybe the 12-hour chart will make it to another 9. Maybe the 12-hour chart will make it to the sequential 13, like here, where we're reversed on a 13. The thing is, the next time the 12-hour gets a sequential 13 and potentially another 9, maybe even 2 more, it can perfectly align with the daily 9 top in 3 days from now, okay? though 3 days from now is only 6 candles. So you can't get 13 out of 6 candles. So that's unlikely. Even if we go one more candle into the candle following the 9, that only gives you 8 more candles. So again, very unlikely that your 12-hour will be able to line up with the daily on a 13 on one, 9 on the other. It could line up with a 9 on the 12, but a 9 following a 9 is not as strong as a 13. Like I'd rather have a 13 12-hour and 9 daily, ideally something on a weekly as well, but we don't have anything. Weekly still has weeks to go. So maybe we have the bull trend a little bit longer, the short-term bull trend. You can't have a long-term bull trend until you have some kind of a pullback, right? I mean, even the S&P pulls back. Here is the daily S&P, and here's the daily S&P. And when we started to go up, well, you know what? Let me look at the weekly S&P. Look, the weekly S&P has gone straight up since this low. But the difference with the S&P is that S&P was in a long-term bull trend. And this was the pullback of the bull trend, which I was more than happy to buy. I was also looking to buy this pullback. And if you watch my videos from around the end of the year, I was bullish on the S&P then. So this is the pullback that prevents it from going straight up. And now I'm bullish. And now we've broken to new all-time highs, and I'm still bullish. Now, the S&P will always pull back. Every market always pulls back. Even if I go back to the 2009 low, here we went straight up. Here is the pullback. Here is a reasonable pullback. You know, what was the pullback by percentage terms? We hit a high of 960, and we went as low as 860. Not a great pullback, but it went down 15%, you know. For the S&P, that's significant. It was a bit of a pullback, and then we kept going up, right? Tops on a 9 here, tops on a candle following a 9 there. This would have been tricky because the 2 went above the 1. So sequential would have gotten you into a little bit of trouble here, would have been perfect right there. But this was a much stronger pullback, right? Like this was from 1200, even above 1200, from 1220, all the way down to 1000. 1000 is a nice round number. That was more than a 15% correction. That was almost a 20% correction, okay? I'll wait for the pullback, right? So the point is this. The point is this, right? It's all well and good calling the low. Let's look at the S&P. If you called the low right here, it went lower. It went lower by about 15%. And then if you said, hey, I know I called the low here, but I'm absolutely sure this is the low. This is the low. We're going up. We've been going up for 4 months. And then look what happened. And then we fell again. And now what are you going to say? You're going to say, oh, no, but this is the low. It hit 666, the sign of the devil, so this has to be the low, right? Actually, when it hit 666, everyone said that this is the S&P's cursed and it's going to 0, right? That was the low, 666 right there. Look at this right here. That's where the low is. If I put it right on that candle, you see it, 666.8. That was the low, okay? 666. So this is why I don't want to call Bitcoin the low, right? So because this was the capitulation in the S&P, and then it went slightly lower, and then it went lower still. If I go to Bitcoin, daily chart, that was weekly. S&P, Bitcoin, we can look at daily. So here we made the low, and here is the secondary low, but the secondary low in Bitcoin is higher than the secondary low in the S&P. Does that mean that it's different? Maybe, right? But they're both close enough to each other. And now it went up. Now, how high did it go up? It went from about 70.45 all the way up to 950. So let's just say 750 to 950, right? So the S&P went up. For the S&P, that's a decent amount, right? I mean, you can just compare the two side by side. Compare the two side by side and look at the average percentages that the S&P moved from the very top and then compare them, right? Overall, the S&P fell from the top at, what was it, 1570, and it fell to about 600. So it fell, it fell 66%, right? But Bitcoin fell 84%. So every move in Bitcoin is going to be larger by percentage terms on the way down and on the way back up, right? So I am actually still anticipating this, and I am still anticipating this. So I am looking for one more drop to be lower than 3,100, say 28. And then a lot of people will think, okay, well, it finally bottomed this time. And then we get one more to touch sub 2,000 that demoralizes everyone. People that were wrong about the bottom at 3.1 and then again at 2.8, those people will be too scared to call the bottom at sub 2. Also, no one would listen to them by that point, that they're going to be wrong again. No one wants to buy Bitcoin at this point, just like no one wanted to buy the stock market at that point. And I was actually down in Miami. I was on South Beach, Miami in 2010, looking at condos, 2-bedroom condos for $40,000 to $50,000. And I didn't buy it because I was scared that Miami was just gonna, go underwater and no one was gonna be living there anyway. So it's a waste of $50,000. Today, those condos are like $400,000, right? I was there. I was looking at them. I was walking into the buildings. I can talk all day about my decision making and the bad choice that I did for not investing in those condos. And that was here. That was in 2010. That wasn't even in 2009 when it bottomed, but the real estate didn't bottom then. It actually, well, the prices were already rising, but it's not easy buying it, right? And how many people to this day remain in denial of the 10-year run in the S&P 500 from that low? How many gloom and doom bloggers are still in denial from here? All of that Shmita garbage and all this other nonsense of how everything crashes every 8 years. No, it doesn't, okay? My Dow chart proves that. Things crash every 8 years, every 25 years, right? So 25 years of upside, then a crash. Then 8 years later, another crash. And then when you recover, 25 years of upside. Everyone forgets that 25 years of upside in the middle. That's the history of the stock market. 25 years of upside. I've talked about it on other occasions with Tyler. I think the robotics boom is coming. Like I see, self-driving cars. I'm a big fan of Tesla. Like I think the market is going to go up, 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 up and away with the rising dollar. So I think the dollar is going to rise and the stock market is going to rise. And that's what might kill the stock market, the rising dollar. And politicians that don't understand economics and don't want to let free market do its thing. Anyway, yeah, I know. Don't give me like all that stuff. The Fed and the plunge protection team and how it's not free market. Again, we can debate that all day. I see some questions. Do you think it's possible that the next halving won't affect the price much? No, I think it's going to affect it. And it will be only 2024 halving. No, I think each subsequent halving will affect the price less. So I think the current halving will affect the price, but less than the last halving. And the 2024 halving will affect the price less than the 2020 halving. But because of the 2020 halving is the reason why I think the bear market cannot last past the halving. Now, if this was gold, and if there was no halving, then I could extend the bear market. But I think that the bear market has to end before the halving. That's why in my probabilities Excel spreadsheet, I had it the way I did. Okay. So where was I going with this history of the S&P, right? So pullbacks happen. I'm waiting for a pullback, whether it's this, or this. I need a pullback. Did I think that the S&P was in a bull market until I saw a pullback? Absolutely not. When did I finally admit that the S&P was in a bull market? Well, because I was reading too many stupid gloom and doomers. I did not admit that the S&P was in a bull market until around 2012, until around this area. And yes, I was very, very late. And I don't want to make that mistake again. When should have I said that the S&P is in a bull market? I should have said it right here. Well, I should have been able to call the damn low, but I didn't know about sequential back then. Actually, no, that's a lie. I already did. But I wasn't I didn't trust it. I knew about sequential, but I didn't trust it. The S&P bottomed on a weekly 9. I'm actually curious if there was a daily 9 that week, but I started, I saw traders use sequential back in 2007 and 8. I wonder if I can pull up. No, I don't have access to those emails anymore. They were corporate emails. So I don't have records. I think my sequential records from traders go back to when the bull market started, not here. I got to check what my oldest S&P references to sequential, but I don't have these emails because they were corporate emails. Bear Stearns no longer exists. JP Morgan, I don't have access to that email anymore either. Anyway, so there was a night, I should have been able to time the low based on sequential, but like I said, I wasn't looking at it back then. I'm very curious if there was a daily 9 the week of March 2nd or March 9th. Let's go and take a look. So here's the S&P chart. You can do this because it sure as hell marked a good top in 2018. Let's use the go to button. Let's delete all of that. Let's go to 2009, March. We can go to March 2nd. That was the week of the 8th weekly candle. Let's wait for the sequential. Oh my God. You guys have no idea. If this happened today, how I would have been all over the trade. That is a doji candle on a daily 9, the week of the weekly 9. Or it might have been Friday of the 8th candle. That's the 6th. Yeah, that's Friday. So that's Friday of candle number 8 weekly. And that is Monday of candle number 9. That is Tuesday of candle number 9. I would have been all over the S&P here. This is what I would do today, right? It also called a nice little bounce here. 9 and combo 13 followed by aggressive. Called a nice bounce here off of a 9 as well. Okay. Man, I would have been all over it. Again, nice local top right there on this 9. Nice little top here, but the next candle went straight up. So you got your stop loss hit. This would have been the perfect trade. The low was timable. The low was timable, and everyone was scared to call the low. The reason why everyone was scared to call the low is because of 2 prior failed attempts by the bulls of the S&P 500 to call the low of the great financial crisis. Okay, this was attempt. This is capitulation here, and that is despondency. Okay, so there you go. Let's go back to the price of Bitcoin. Got off on a little tangent there. It's going to be a good video. think I've already been going for an hour. I should probably stop. I haven't been looking at your questions, guys. Kind of been on a little rant here. But I think it was a good rant. I want to cut out parts of this video, but I think this whole video is going to be good. So where are we here? What is this? This is the 4-hour chart. The 4-hour chart is still on a red 3. Not sure why. 1, 2, 3. Oh, it's just lower than this close. Okay, that's going to price flip. Looks like we're bouncing back up nicely. And this is what I mean. That while the 12-hour did its best effort to pull you down off the 9, the higher level time frames are more important. And therefore, this is why I still think 6.1 is a very reasonable target. For the short term right now, I would rather be long. But since I'm already late to the long trade because I was busy hiking Mexico and I did not take the long trade off of this triangle breakout, I will wait and try to time the short trade around 6,000. If I'm handed the trade, like if the trade's not there, I'm not going to take it. I'll wait. I'll wait a year. I'll wait 3 years. I'll wait for that trade. And I still have my HODL position in Bitcoin. So Bitcoin going up is fine for me. You guys have to make your own trading decisions. Right now, if the next candle is a green 2, above a green 1, above the 9, that's a bullish trade on a 12-hour chart. The 4-hour chart just price flipped. So next candle in 2.5 hours could be a green 2 above a green 1 above the highs. Again, 4-hour bullish, 12-hour will become bullish, daily still bullish, weekly still bullish. Time frames are bullish. The 1-hour chart went bullish on this green 2 above a green 1. If you're unsure, you had a green 3 above a green 2. Now that's a 13, but that's not a 13 that scares me. I have a 5 sequential, 5 setup, plus I'm at the highs. I love buying the breakout of all-time high, just like I love shorting the break of support at yearly low, like what happened with 6,000 at the end of last year. I'm not going to bother with this chart. No, I'm not going to bother with this chart either. It's the weekend. GBTC isn't trading. The mining profitability. This is the one chart that makes me question that we're going to go lower in price. This is the one chart that can do that. However, I still think mining profitability will pull back to this line. Maybe it'll be after the halving. Maybe, because remember, after the halving, this happens. Maybe it'll be after the halving. Maybe after the halving, remember, this will get cut in half. So if the halving was to take place tomorrow, this would swing right down to this line. Though it's not going to do anything for the price, right? The price will still be there. But if the current price lasts until the halving, let's go back to my probability chart. If the current $3,000 price lasts into the halving of 2020, I will be 80% certain that the $3,000 low is in, right? Is that going to make me all that different than Tour de Mister's current 30%? Not really, right? Not really. Because remember, if the price of Bitcoin pulls back to $3,000 at the end of this year, you know, who makes the better call? The guy that said Bitcoin bottomed at 3,000 in December, or the guy that said, hey, Bitcoin bottomed at 3,000 in the following December, right? Because at least you didn't have to deal with all the ups and downs, right? So it's not that different of a call. I'm not saying this is going to happen. And I'm not saying Tour is wrong. I respect Tour's opinion very much. Tour is a better analyst than I am. I respect Tour's opinion, right? But the probability, like I said, I would rather be a little bit late than wrong. I don't want to be wrong. I'd rather be late. I'd rather give up some profit, but make sure that my that I don't lose money, okay? We can also go back and once again, go back in history to the last bear market. Oh, didn't mean to move that. Right? You have to keep in mind the last bear market. The low came in January at 150, but there was a secondary low in August of 160. So where is the better buying opportunity? Right here after the secondary low at 220, or right here after the first low and buying it at 220? I mean, it's impossible to catch the low, right? And this low only lasted half a day. So let's say you bought at 220, or let's say you bought at 250. Let's be reasonable here. You bought at 250 in January. If you bought at 250 in January, there was a more than trivial probability that you panicked when it fell to 160 in August. But if you bought at 250 in October, you never had the opportunity to panic because you were never in a bad position. I would rather buy here for the bull market as the moving averages are about to cross over. This is where I'm way more confident that the bull trend has started. Not up here, not there. I still think the current environment is this candle of November. But even if I'm wrong, even if we did bottom, like we did in January of the last bear market, there was still 1 and 2 significant pullbacks that allowed you to buy Bitcoin at the same exact price if you were good at timing that low. But there is also a non-trivial chance that we're in this area. In which case, if you go all in now, assuming that the bottom is in, what happens to your position if we do fall to below 2,000? I don't want you to be the guy that panics, okay? I don't want to be the guy that panics. So if you have a long-term position, something you're going to hold for years into halving of 2024, that position will be fine. But if you're going to get nervous with your trade or position, if we fall below 2,000, then you shouldn't have it right now. Okay. I believe there will be other opportunities to buy Bitcoin at a reasonable price. Maybe that reasonable price is 5,000. Maybe that reasonable price is 6,000. But I am 95% certain there's going to be an opportunity to buy Bitcoin like what happened in October, November of 2015. You didn't catch the low. You might have doubled the low. Remember, the low was 150 and 160. Let's say you bought at 300, right here, $320, 100% above the low price. But you were never in a losing position. At any point, you were making money from the moment you got into that position. That's what I want to buy. That's what I'm looking for. And I know that opportunity will be there. The question is, will I perfectly time it? The answer is, I don't know, and no one else does either, okay? And this is what I mean. I'm perfectly happy buying Bitcoin at 300, not at 150, and watching it go to 20K. So I would be perfectly happy buying Bitcoin at 6,000 and watching it go to 50K, then buying it at 3,000 and watching it go to 1,500. Okay, not worth it to me on some of my Bitcoin. On other Bitcoin, it's okay. It's a long-term position. So that's kind of my view on things. Man, this was a long episode. I hope you guys are enjoying it. I do have 1,500 viewers right now. I know the live chat's probably going nuts. Hey, Bitcoin motorist. You haven't been paying attention to the live chat, have you? You have. Let's take a look at some of this stuff. If you have no, oh no, those are last week's questions. Can Tone add in the volume right now while looking at the S&P? Yeah, I can glance at the volume. Was referring to looking at volume when he was examining the low of the S&P to Bitcoin. Well, I don't have volume on any of these, right? I mean, we can add the volume. No, I don't have volume on this either. I have volume on this. So here is the weekly low of the supposed weekly low, right? So here is the big volume spike down. Here is the ultimate low, and volume was lower. Here is the secondary low, which was a little bit higher. Let me make sure I'm sharing the right screen. And volume was lower still. Okay, now let's go look at the S&P. I never know which button to click on these things. Let's go to historical S&P. Let's put the volume in here. I don't see any volume. Oh, it's because I'm looking at TVC. Oh God, this is annoying. So what do? I don't want to log out. I got to open incognito mode. But then I won't have these settings. Sorry, guys. Like TradingView doesn't allow you to look at S&P or Dow data without paying them for it. If you're logged in. If you're not logged in, you can see it. So unfortunately, I can't look at the volume. Or maybe I could. Hold on. Let me pull up George Salmon's article. George. I still need to have him on the show. George Salmon capitulation article. One of my favorite articles. I reference it sometimes. George and I were both writing for Cointelegraph. We also used to do videos together on trading and technical analysis. George is a CMT, Chartered Market Technician. Here you can see the volume. So the volume was elevated on the capitulation right there. And then lower volume on on despondency, and then higher volume and in between the two on the ultimate low. Okay, so there it is. Okay, so check out this article. Just Google George Salmon capitulation. Reference it all the time. Okay. Hey, Bitcoin motorist, you got anything else? Not sure if you're still with me. All right, guys. I should leave it here because I haven't even eaten today. I think this was a good episode. But hey, workshop tomorrow. Tomorrow, the webinar. Webinar tomorrow. Don't forget, webinar tomorrow. You can still sign up. It's Introduction to Trading. It does not include access to the TI indicator. And yeah, it's 3 hours. Starts at 9 a.m. Eastern tomorrow. And you can check out my schedule. You can check out the in-person workshops. Anyway, check out the store. If you want to support this free YouTube channel that hopefully is doing good things, not bad things, please sign up for TradingView using this link or TorGuard using that link. All right, guys, I think I'm going to call it a day. I didn't get to any of your questions, but I had to talk about why I am holding out on calling the low, and I'm only at 40%. realistically slightly above. I am growing the beard back. I am going to shave my head this week as everyone comes to New York for consensus. I will talk to you all on the next one. Good luck trading, guys.